Welcome everyone. Today I'm going to be reading out the different acronyms, what those acronyms stand for, and a little bit about what that acronym is, whether it's an organization or regulation or so forth, so that you have a little bit of context about what it is. So if you like this video, make sure, of course, to like and subscribe, and check out my other YouTube channels, whether it's Agile Games with James or Church Transformation if you're so interested. But I hope this helps anyone studying for their NMLS exam, or just if you are a home buyer and you just want to know a little bit more about the terms and acronyms that are thrown around. I'm hoping this will help you. But without further ado, let's get started. AARMR, or ARMOR, as I'm calling it, is the American Association of Residential Mortgage Regulations. The AARMR is the national organization representing the state residential mortgage regulators that promotes the exchange of information between and among the executives and employees of the various states who are charged with the responsibility for the administration and regulation of residential mortgage lending, servicing, and brokering. AML stands for Anti-Money Laundering. Anti-money laundering are the processes set in place to reduce the illegal practice of money laundering. APR stands for Annual Percentage Rate. APR is the annual rate charged for borrowing and is expressed as a percentage that represents the actual yearly cost of funds over the term of a loan, including any fees or additional costs associated with the transaction. APR provides borrowers with a bottom line number they can easily compare to rates charged by other lenders. AUS stands for Automated Underwriting System. An automated underwriting system is a technology-driven underwriting process that provides a computer-generated loan decision. The lending industry is broadly migrating to the use of new technology-driven loan underwriting platforms to improve the processing time of all types of loans. BSA stands for the Bank Secrecy Act. The purpose of the BSA is to require the United States financial institutions to maintain appropriate records and file certain reports involving currency transactions and a financial institution's customer relationships. CC&R stands for Covenants, Conditions, and Restrictions. CC&R are the rules of your neighborhood. They are described as the requirements and limitations about what you can do with your property. The goal of the CC&Rs is to protect, preserve, and enhance property values in the community. CE stands for Continuing Education. This refers to the overall 8 hours of yearly continuing education you need to keep your NMLS certification up to date. CFPB stands for Consumer Finance Protection Bureau. The CFPB was created to provide a single point of accountability for enforcing federal consumer financial laws and protecting consumers in the financial marketplace. Before the CFPB was created, that responsibility was divided among several agencies. CFR stands for Code of Federal Regulations. The Code of Federal Regulations, CFR, is the codification of the general and permanent rules published in the Federal Register by the executive departments and agencies of the federal government. It is divided into 50 titles that represent broad areas subject to federal regulation. CHARM, also known as CHARM, stands for the Consumer Handbook on Adjustable Rate Mortgages. The CHARM booklet is an informational booklet containing general information on adjustable rate mortgages, or ARMs, that is provided by the lender to the loan applicant at the time of application for certain adjustable rate mortgage loans. COFI, or COFI, stands for Cost of Funds Index. A cost of funds index, or COFI, is a regional average of interest expenses incurred by financial institutions, which in turn is used as a base for calculating variable rate loans. The interest rate of an adjustable rate mortgage, for example, is often linked to a regional COFI specified in the particular loan documents. CRV stands for Certificates of Reasonable Value. The Certificates of Reasonable Value is the document issued by the Veterans Administration based on an approved appraisal It establishes a ceiling on the maximum VA mortgage loan principal. CSBS, also known as CSBs, stand for Conference of State Bank Supervisors. The CSBS is an advocate for the interest of state banking to the respective state legislative and regulatory agencies. The CSBS provides training and continued education for the examiner professionals, graduate school scholarships, and resources for examiners, researchers, and other industry professionals. DTI stands for Debt to Income and is a ratio. Your debt-to-income ratio is all your monthly debt payments divided by your gross monthly income. This number is one way lenders measure your ability to manage the monthly payments to repay the money you plan to borrow. DU stands for Desktop Underwriter. Desktop Underwriter is an automated underwriting system, or AUS, for mortgage underwriting that calculates whether a loan meets approval requirements. It is used by Fannie Mae. ECOA, or ECOA, stands for the Equal Credit Opportunity Act. The Federal Trade Commission, or FTC, the nation's consumer protection agency, enforces the Equal Credit Opportunity Act, or ECOA, which is a preventative measure at the time of application that prohibits credit discrimination on the basis of race, color, religion, national origin, sex, marital status, age, or because you get public assistance. EEM stands for Energy Efficient Mortgage. The Federal Housing Administration's Energy Efficient Mortgage Program, EEM, helps homebuyers or homeowners save money on utility bills by enabling them to finance the cost of improvements that will make their home more energy efficient, including solar energy systems. EPS stands for Earnings Per Share. Earnings per share, or EPS, is calculated as a company's profit divided by outstanding shares of its common stock. FACTA, or FACTA, stands for the Fair and Accurate Credit Transaction Act of 2003. The Fair and Accurate Credit Transaction Act, or FACTA, is a federal law enacted by the United States Congress in 2003. Its stated purpose was to enhance consumer protections, particularly in relation to identity theft. FCRA stands for the Fair Credit Reporting Act. The Fair Credit Reporting Act is a federal law that regulates the collection of consumers' credit information and access to their credit reports. It was passed in 1970 to address the fairness, accuracy, and privacy of the personal information contained in the files of the credit reporting agencies. FEMA, or FEMA, is the Federal Emergency Management Agency. FEMA, the Federal Emergency Management Agency, mission is to support the citizens and first responders to promote that as a nation we work together to build, sustain, and improve our capability to prepare for, protect against, and respond to, recover from, and mitigate all hazards. Primary and secondary lending institutions regulated by the federal government require flood insurance on any federal-related property located within certain flood-prone areas, as identified by the Federal Emergency Management Agency, or FEMA. FFIEC stands for the Federal Financial Institutions Examination Council. The Council is a formal interagency body empowered to prescribe uniform principles, standards, and report forms for the federal examination of financial institutions by the Board of Governors of the Federal Reserve System. The CFPB publishes the average prime offer rates for a broad range of types of transactions in a table updated at least weekly on the FFIEC website. FHLMC stands for the Federal Home Loan Mortgage Corporation. The Federal Home Loan Mortgage Corp. Is more likely known as Freddie Mac, is a stockholder-owned, government-sponsored enterprise, or GSE, chartered by Congress in 1970 to keep money flowing to mortgage lenders in support of homeownership and rental housing for middle-income Americans. FHA stands for the Federal Housing Administration. A Federal Housing Administration, or FHA loan, is a mortgage that is insured by the Federal Housing Administration, or FHA, and is issued by an FHA-approved lender. FHA loans are designed for low to moderate income borrowers. They require a lower minimum down payment and lower credit scores than many conventional loans. FINCEN, or FinCEN, stands for Financial Crimes Enforcement Network. The Financial Crimes Enforcement Network is a bureau of the United States Department of the Treasury that collects and analyzes information about financial transactions in order to combat domestic and international money laundering, terrorist financing, and other financial crimes. The FINCEN, or FinCEN, published the final rules regarding the requirements of non-bank residential mortgage lenders and mortgage brokers to establish an anti-money laundering program, or AML, and file suspicious activity reports, or SAR, under the Bank Secrecy Act, BSA. FNMA, also known as Fannie Mae, stands for the Federal National Mortgage Association. Fannie Mae is a tax-paying corporation created by Congress to support the secondary mortgage market. It purchases and sells residential mortgages insured by the FHA or guaranteed by VA, as well as conventional home mortgages. FSBO stands for sale by owner. For sale by owner, or FSBO, is a term that refers to a specific method of selling a property. In a FSBO listing, the owner sells the property without the use of an agent or broker. FTC stands for the Federal Trade Commission. When the FTC was created in 1914, its purpose was to prevent unfair methods of competition and commerce as part of the battle to bust the trusts. Over the years, Congress passed additional laws giving the agency greater authority to police anti-competitive practices. The FTC, along with the FCC, created the Telephone Consumer Protection Act that created a national do-not-call list that mortgage lenders need to abide by. GFE stands for Good Faith Estimate. Starting in October 2015, the loan estimate form replaced the good faith estimate used for most mortgage loans as a result of the Truth in Lending Act. A lender or mortgage broker is required to provide potential borrowers with a loan estimate within 3 business days of receiving a loan application. GLBA stands for the Graham-Leach-Bliley Act. The GLBA requires that financial institutions act to ensure the confidentiality and security of customers' non-public personal information, or NPI. GNMA, also known as Ginnie Mae, stands for the Government National Mortgage Association. The Government National Mortgage Association is a federal corporation that guarantees principal and interest payments on mortgage-backed securities issued by approved lenders. The association is commonly known as Ginnie Mae or GNMA and is part of the U.S. Department of Housing and Urban Development. GPM stands for Graduated Payment Mortgage. A graduated payment mortgage, or GPM, is a type of fixed-rate mortgage in which the payment increases gradually from an initial low base level to a higher final level. Typically, the payments will grow between 7 to 12% annually from their initial base payment amount until the full monthly payment amount is reached. GSE stands for Government-Sponsored Enterprise. A government-sponsored enterprise, or GSE, is a quasi-governmental entity established to enhance the flow of credit to specific sectors of the American economy. Created by acts of Congress, these agencies, although they are privately held, provide public financial services. HECM, also known as a HECM, stands for Home Equity Conversion Mortgage. The Home Equity Conversion Mortgage, or HECM, is a Federal Housing Administration's FHA reverse mortgage program, which enables you to withdraw some equity in your home. You choose how you want to withdraw your funds, whether in a fixed monthly amount or in a line of credit or a combination of both. HELOC, or also known as a HELOC, stands for Home Equity Line of Credit. The home equity loans and HELOCs both use the equity in your home, that is, the difference between your home's value and your mortgage balance, as collateral. Since the loans are secured against the equity value in your home, home equity loans offer extremely competitive interest rates, usually close to those first mortgages. Compared to unsecured borrowing sources like credit cards, you'll be paying less in financing fees for the same loan amount. HLTV, or TLTV, stands for high loan-to-value, or total loan-to-value, ratios. The loan-to-value, or LTV ratio, is an assessment of lending risk that financial institutions and other lenders examine before approving a mortgage. Typically, a loan assessment with high LTV ratios are considered higher-risk loans. Therefore, if a mortgage is approved, the loan has a higher interest rate. Additionally, a loan with a high LTV ratio may require the borrower to purchase mortgage insurance to offset the risk to the lender. This type of insurance is called private mortgage insurance, or PMI. HMDA, also known as HMDA, stands for the Home Mortgage Disclosure Act. The Home Mortgage Disclosure Act, or HMDA, requires many financial institutions to maintain, report, and publicly disclose loan-level information about mortgages. This data helps show whether lenders are serving the housing needs of their communities. They give public officials information that help them make decisions and policies, and they shed light on lending patterns that could be discriminatory. The public data is modified to protect applicant and borrower privacy. Unlike ECOA, HMDA are regulations to make changes after loans have been denied or secured to prevent discrimination in the future. HOEPA, also known as HOPA, stands for Home Ownership Equity Protection Act. The Home Ownership and Equity Protection Act, HOPA, as implemented by the Federal Reserve Regulation Z, Section 32, imposes additional disclosure requirements on these types of loans and prohibits certain acts and practices in connection with mortgage lending. HOPA prohibits extending credit without regard to a consumer's repayment ability. HOPA identifies a high-cost mortgage loan through rate and fee triggers, and it provides consumers entering into these transactions with special protections. HPML stands for Higher-Priced Mortgage Loan. A higher-priced mortgage loan is a consumer credit transaction secured by the consumer's principal dwelling with an annual percentage rate that exceeds the average prime offer rate for a comparable transaction, as of the date of interest rate is set by a specific margin. HUD, also known as HUD, stands for the Department of Housing and Urban Development. The purpose of the U.S. Department of Housing and Urban Development, or HUD, is to provide housing and community development assistance and to make sure everyone has access to fair and equal housing. LIBOR, or LIBOR, stands for London Interbank Offer Rate. London Interbank Offer Rate serves as a globally accepted key benchmark interest rate that indicates borrowing costs between banks. The rate is calculated and published each day by the Intercontinental Exchange, or the ICE. LTV stands for Loan-to-Value, is also a ratio. The loan-to-value ratio is a financial term used by lenders to express the ratio of a loan to the value of an asset purchased. The term is commonly used by banks and building societies to represent the ratio of the first mortgage line as a percentage of the total appraised value of real property. LTV is calculated by the principal amount of the loan divided by the collateral's appraised value, usually represented as a percentage. LPA stands for Loan Product Advisor. Loan Product Advisor is the automated underwriting system, or AUS, for Freddie Mac, and for mortgage underwriting that calculates whether a loan meets approval requirements for Freddie Mac. MARS, also known as MARS, stands for Mortgage Assistance Relief Services. The Mortgage Assistant Relief Services, or MARS, rule makes it illegal to charge upfront fees and requires specific disclosures in ads and when you forward a lender's offer to a homeowner. MSA stands for Metropolitan Statistical Area. A metropolitan statistical area, formerly known as a Standard Metropolitan Statistical Area, or SMSA, is a formal definition of a region that consists of a city and surrounding communities that are linked by social and economic factors, as established by the U.S. Office of Management and Budget, or OBM. MIP, or MIP, stands for Mortgage Insurance Premium. Mortgage insurance premiums, or MIP, is an insurance policy used in FHA loans if your down payment is less than 20%. The FHA assesses either an upfront MIP, UFMIP, at the time of closing, or an annual MIP that is calculated every year and paid in 12-month installments. MLS stands for Multiple Listing Service. A multiple listing service, database, and software is used by real estate brokers in real estate representing sellers under a listing contract to widely share information about properties with other brokers, who may represent potential buyers or wish to work with a seller's broker in finding a buyer for the property or asset. The listing data stored in a multiple listing services database is the proprietary information of the broker who has obtained a listing agreement with a property seller. NMLS stands for Nationwide Multi-State Licensing System. The NMLS stands for the Nationwide Mortgage Licensing System and Registry. NMLS is a web-based platform for regulatory agencies to administer initial licensing applications and ongoing compliance requirements. NMLS is used by participating agencies to process the applications of companies and individuals looking to apply, renew, surrender, or amend licenses for various industries. NPI stands for Non-Public Personal Information. Non-public and personal information includes social security numbers, credit and income histories, credit and bank card account numbers, phone numbers, addresses, names, and any other personal customer information received by a financial institution that is not public. PITI stands for Principal, Interest, Taxes, and Insurance. Principal, Interest, Taxes, Insurance, or PITI, are the sum components of a mortgage payment. Specifically, they consist of the principal amount, loan interest, property tax, and homeowner's insurance, and private mortgage insurance premiums. PMI stands for Private Mortgage Insurance. PMI is insurance required by mortgage lenders to protect themselves against increased risk on high-ratio loans, usually loans over 80% loan-to-value. Private mortgage insurance covers a portion of the mortgage if a borrower defaults on their mortgage. Under the Homeowner Protection Act, HPA, consumers have the right to request cancellation of PMI when they pay down their mortgage to the point that it equals 80% of the original purchase price or appraised value of the home at the time of the loan was obtained, whichever is less. PUD, or PUD, stands for Planned Unit Development. A planned unit development, or PUD, is a type of building development and also a regulatory process. As a building development, it is a designed grouping of both varied and comparable land uses, such as housing, recreation, commercial centers, and industrial parks, all within one contained development or subdivision. QM stands for Qualified Mortgage. A qualified mortgage is a loan a borrower should be able to repay. QMs can't have risky features like negative amortization or interest-only repayments. RESPA, also known as RESPA, stands for the Real Estate Procedures Act. The Real Estate Procedures Act, or RESPA, was enacted by Congress to provide home buyers and sellers with complete settlement cost disclosures. The act was also introduced to eliminate abusive practices in the real estate settlement process, to prohibit kickbacks, and to limit the use of escrow accounts. RESPA is a federal statute now regulated by the Consumer Financial Protection Bureau, or CFPB. SAFE, also known as SAFE, stands for Secure and Fair Enforcement Act. The Secure and Fair Enforcement for Mortgage Licensing Act of 2008, or the SAFE Act, mandates a nationwide licensing and registration system for residential mortgage loan originators, or MLOs. SAR, also known as SARS, stands for Suspicious Activity Report. The Suspicious Activity Report, or SAR, is filed by the financial institution that observes suspicious activity in an account. The report is filed with the Financial Crimes Enforcement Network, who will then investigate the incident. The Financial Crimes Enforcement Network is a division of the U.S. Treasury. SRP stands for Service Release Premium. A Service Release Premium, or SRP, is the payment received by a mortgage lender, such as a bank or retail mortgage lender, mortgage banker, on the sale of a closed mortgage loan in a secondary mortgage market transaction. The amount of SRP is generally based on the market value of the mortgage note, influenced by several key variables such as interest rate, loan type, and margin for ARM loans. TILA, also known as TILA, stands for the Truth in Lending Act. The Truth in Lending Act, or TILA, protects you against inaccurate and unfair credit billing and credit card practices. It requires lenders to provide you with loan cost information so that you can comparison shop for certain types of loans. UFMIP stands for Upfront Mortgage Insurance Premium. An upfront mortgage insurance premium of 1.75% is required by anyone who takes out an FHA loan. This lump sum is allowed to be financed into the loan so you don't have to actually write a check for it at closing. But make no mistake, you are still paying for it. This insurance money protects the lender in case the borrower defaults on his or her mortgage payments. USC stands for U.S. Code. The United States Code is the codification by subject matters of general and permanent laws of the United States. It is divided by broad subjects into 53 titles and published by the Office of the Law Revision Council of the U.S. House of Representatives. USDA stands for United States Department of Agriculture. The United States Department of Agriculture, also known as the Agricultural Department, is the U.S. federal executive department responsible for developing and executing federal laws related to farming, forestry, rural economic development, and food. UST stands for Uniform State Test. NMLS launched the Uniform State Test, or UST. This is the first major change to SAFE MLO test requirements since the SAFE MLO tests were launched in July 2009. The UST is a new domain or section in the national test. This new domain includes 25 questions, which brings the length of the national test component with uniform state content to 125 questions, of which 115 are scored and 10 are unscored. VA stands for Department of Veteran Affairs. The United States Department of Veteran Affairs is a government agency that provides benefits for veterans, including mortgage loans. YSP stands for Yield Spread Premium. A yield spread premium is the money or rebate paid to a mortgage broker for giving a borrower a higher interest rate on a loan in exchange for lower upfront costs, generally paid in origination fees, broker fees, or discount points. Well, everyone, that's going to wrap up for us today. Make sure, again, to like and subscribe. Hope you enjoyed the video. And if you want to go through it again and you want it to go a bit faster, just remember there are some settings that you can change the playback speed. Also, I plan on making different alphabetical bookmarks, so if you want to skip to a certain section of the alphabet that you're maybe having more trouble with, it will be there either in the description or in a comment below. Please let me know if this helped you pass the exam, or if you're a homeowner, if this has helped you at all, in the comments below. Would love to hear from you. Thank you so much. I hope this helps you pass your exam, or if you're a homeowner, I hope it has educated you to some degree. Thank you so much, and we'll see you next time.